Welcome to the Cardinal Commentary for the foreign equity portfolios. After peaking at 7% in 2021, year-over-year inflation in the U.S. hit 3% in June and is getting ever closer to the Federal Reserve's target of 2%. In fact, prices in the U.S. fell slightly, that's deflation, on a month-to-month basis from May to June. We believe the combination of inflation nearing the target rate and the cooling U.S. economy has created a reasonable chance that the Fed will lower interest rates at the next meeting in September. Portfolio manager Sheila Wilson-Cole says there's no question the next move from the Fed will be a cut, and that's good news for investors.
So a lot of the central banks around the world have begun cutting rates, including the Bank of Canada and the ECB, and the focus is now turning to the Fed in terms of when they might go ahead and cut rates, and it's looking likely that certainly the next move will be a cut. Chairman Powell has indicated that that's very likely the case and that any further hikes are off the table. It's not certain exactly when they will go ahead. It's still data dependent, but there is a good chance that we will see a cut from the Fed in the US before the end of this year.
The S&P 500 is being propelled by a few giant companies: Apple, Microsoft, Google, Tesla, Nvidia, Meta, and Amazon. These Magnificent Seven have accounted for nearly 2/3 of the S&P's returns over the last 18 months. But more importantly, they're trading at an average price-to-earnings ratio of 40, ranging from 24 at Google to 81 at Tesla at the end of June. The PE measures a company's current share price relative to its per-share earnings, and a high PE could mean that a company's stock is overvalued. High valuations can always go higher, but as dividend-focused investors, we like to zero in on what's predictable and find great companies that are undervalued. That's what makes a great investment. Like our newest holding, Air Products and Chemicals. The US-based provider of gases and chemicals for industrial use thrives under any conditions. It operates in a global oligopoly with virtually insurmountable barriers to entry. For example, Air Products has provided liquid hydrogen for 5 decades worth of NASA space missions. Wilson-Cole says we may not realize it, but Air Products products are all around us.
So Air Products and Chemicals is a producer of industrialized gases. So essentially, they produce these gases from air through their processing. We're certainly quite familiar with oxygen as being a vital gas. They also produce a lot of other gases, and they are a major producer of hydrogen. And a lot of these gases are used in a wide variety of industries, whether that's refining, healthcare, manufacturing, and the food and beverage industry. So essentially, they produce products that might not be front and center, but they do touch a lot of parts of our daily lives.
Air Products also meets our criteria of growing its dividend over time, with a 9.5% annual growth rate since 2012. After 8 companies increased their dividends in the first quarter, one more joined in during the second quarter, Medtronic at 1.4%. All of those dividends have led to strong returns over the last 2 decades. And here's the proof. If you had invested $500,000 in this portfolio in 2002, it would be worth nearly $3 million today, outpacing what you would have earned in the benchmark by more than $300,000. And why do we do all this? Because it works. And that's the Cardinal Commentary for our foreign equity portfolios. Thanks for joining us.